You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. I'm very happy to have on the Goldstein on Gelt show Darlene Hart, who is the chairman of U.S. Tax and Financial Services Group, which has offices around the world in London and Zurich, Geneva, and Tel Aviv as well. Darlene, a pleasure to have you.
Thank you. I look forward to the interview.
So a lot of the people who listen to the show here are either Americans who are thinking of moving to Israel or are Americans who live in Israel. So in some fashion, they are dual nationals. And I've seen in my own practice as a financial advisor that people often feel once they've been out of the U.S. for a long time, they don't really have to be involved as far as taxes go. And of course, that's a big mistake. What sort of mistakes have you seen?
Oh my goodness, there are tons. A lot of people are under the misapprehension that if they file and pay their U.S. tax on their U.S. source income and assets, and then they file and tell the Israeli government about their Israeli income and assets. And it seems to me nobody's telling anybody about their assets they have in Switzerland in that Swiss bank account. And it's unfortunate because at the end of the day, if you're an American citizen, you are subject to U.S. income tax on a worldwide basis, and it doesn't matter where you live. That's the price of that little blue passport and taking on U.S. citizenship.
That's a very, very, very expensive price. So for people who leave the United States and in fact have no intention whatsoever of returning, does it pay for them to give up the passport and give up their citizenship?
I would think so. Because there is a cost to holding that U.S. passport, and to be honest with you, I find that more and more people, once they actually prepare the returns and they find out what the actual cost is, it's easier for them to make a decision to either keep the passport because it pulls at their heartstrings. They feel like they're an American. They don't want to give up that American passport. But there's a cost to it, there may be a cost to it. It really depends on what tax bracket you're in Israel and what you're doing in Israel. But once you monetize it, there are a lot of people who do give up their U.S. passport.
Wow, that's a very serious move for a lot of people, both for the emotional problems as well as practically. Sometimes it is easier to get around the world on a U.S. passport. I just came out with a book called The Expatriate's Guide to Handling Money and Taxes. Along with accountants and tax lawyers, we wrote this to expose people to some of the kind of bigger problems. So you had mentioned before that someone might have a Swiss bank account, but let's just go over the case of an American who lives in Israel and he opens up a local bank account, or he has this pension plan in Israel and has accumulated, let's say, tens of thousands or hundreds of thousands of dollars or shekels in that account. What does he have to worry about?
Well, first of all, under the strict guidelines of the U.S. tax law, a foreign pension, an Israeli pension, is not a U.S. qualified pension. So any employer contributions made to that pension plan should have been included as taxable income, and any growth within the plan should have, it's seen by the U.S. government as if it were a savings account. So in reality, you should be reporting all of the income on an annual basis before you even take a distribution. Now, depending on what your risk tolerance level is, you can make a treaty claim and claim, on a Form 8833 on your U.S. return that, the pension that your Israeli pension is, it would be double taxation if you paid tax on it now while the money was going in, as well as when you retire, when the money comes out. So there's a potential treaty claim that could be made, but it's a bit more of aggressive position.
Has that gone to a tax court? Meaning the regular guy, I'm curious if this has ever been, this specific question has been tested. And I'm not talking about people who create aggressive pension plans, but the standard pension that you might have in Israel or the UK or Switzerland. Has the IRS gone after people on that front?
No, they haven't. But that's the IRS. First of all, there are, I don't know, about 2.4 million tax returns that are filed on an annual basis. They audit. Well, there's only 13,000 people who actually audit U.S. tax returns. Mm-hmm. So your chance of being audited are pretty slim. A lot of people were audited in Israel specifically because there was a huge number of individuals in Israel who were filing U.S. tax returns and taking dependency deductions for children who they were not allowed to necessarily take a dependency deduction for, and they were getting huge credits back. Mm-hmm. So the U.S. government had, I would say, about 20 some odd IRS auditors over in Israel starting in January of 2012. Man. So there was some serious abuse. And so I think Israel, to be honest with you, is frontline and center on the radar of the IRS at this point.
Wow, that could certainly be difficult. We are talking with Darlene Hart, who's the chairman of U.S. Tax and Financial Services Group. She's a 30-year veteran in the world of taxes and accounting, and as well as financial and retirement planning. She's been talking to us about some of the requirements that people have when they live outside the United States back to the United States. And it's funny you mentioned that in Israel people like to take all sorts of deductions. I was reading an article recently that even in the States people try to take deductions for their pets as dependents as well.
Yeah, that's a bit outrageous and definitely unsupportable under the tax law.
You know, some pets are very expensive. So let's focus on something else. I know another area that you deal with is in estate planning. A lot of times when people leave one country, they figure that their old will is probably sufficient. When someone, for example, leaves the United States and moves to a foreign country, is the original will okay, or is there something that he needs to be considering?
Well, there's nothing wrong with your original will. It depends on the country in which you're moving to, whether or not the will and where your assets are. Let me give you an example. All right, if you've got and I can only talk, to be honest with you, with regards to what I do know. Mm-hmm. And I lived in England for 24 years, and I've only lived in Switzerland for 4. And I currently do not live in Israel, but we do have an office there. So I'm not as familiar with Israel estate law, but if you die without a will in England, that's one thing. If your assets, 50% goes to your spouse and the other 50% goes to your children. Okay?
Okay.
And in Switzerland, it's a different story. I don't know what the situation, what the intestacy laws are in Israel. You'll have to talk to an Israeli about that. But even if you have just a U.S. will in Switzerland and in England, they recognize a U.S. will. I would think that the Israeli courts would recognize a U.S. will, but I don't know that for certain.
Right. Now we see that my experience has been with clients who passed away that their American will did hold. But a lot of times people say that you should have a will in every jurisdiction in which you own property, and other people say you can't have more than one will.
No, to be honest with you, you can have more than one will. I mean, for instance, I've got 3 wills myself. I have assets, real estate in Ireland, I have real estate in England, and I have real estate in the United States. And I have a will in each area. And the reason I have a will in each area to pass those assets on is because if I don't, I have to have my U.S. will probated first in the United States, then I have to have it probated again in England, and then I have to have it probated again in Ireland. And the amount of time it takes to go through probate is anywhere from 3 to 6 months. Mm-hmm. So my heirs or my executor could not clear up my estate for at least a year, possibly a year and a half, unless if I have 3 wills, I can have probate done in all 3 countries at the exact same time. Mm-hmm. So you really look at the assets that you have.
Is it a benefit to put all of the assets into a trust so that it doesn't actually have to go through probate?
Well, it depends, again, on which country you're living in, because the trust laws, if you're living in England, the trust laws in all my assets in the United States, or for example, if I was living in England and I had my U.S. property and my Ireland property and all of my other stocks and bonds in a trust, which is a lot of people in the United States have these living trusts. Well, that is an active trust. That is a very good trust. It's a legal document. But in England, if I move to England with that trust, I now have brought my entire worldwide assets into the UK tax base.
Because you are resident in England?
Because I was resident in England.
Mm-hmm.
All right. Now, in England, they have a tax regime where foreign nationals who move to England are not subject to UK tax on their worldwide assets. But because I had all of my assets in a trust, and I was the settlor of the trust, and I was the trustee of the trust, mm-hmm. It now brought everything under the UK tax net.
So you really have to plan before you move to structure your
assets.
assets.
Before you move, you really do, and especially the Americans who are dealing with those trusts, which are very good in the United States. There's nothing wrong with having all of your assets in a trust just to avoid probate, because probate can be very expensive. But once you actually move to another jurisdiction, you have to look at the laws of the jurisdiction in which you reside. Now, if you are a resident in Israel and you have an offshore trust and you are the trustee of that trust, again, I'm sorry, I'm not an Israeli tax lawyer, but you've got to look at what the laws are in Israel with regards to that trust. Now, I understand trust legislation in Israel is fairly new. It's only about 5 or 8 years old.
Right.
I don't even think it's 10. I think it was 2008.
And it changes on a regular basis.
Pardon?
It seems to change regularly with a lot of updates.
Yeah, well, that could be. But it would be interesting, actually, for you to have someone speak on that point alone.
Okay. Actually, that does sound like a good point. In fact, we have been speaking, we're just about out of time as far as that goes. Darlene, tell me in the last few seconds, how can people learn more about your work?
Oh, just send us an email or give us a call at US Tax and Financial. My email address is d.hart@ustaxfs.com. Have them give me a call or have them call our Israel office.
Okay, and we'll put a contact and a link to you in the show notes at goldsteinongelt.com. Darlene Hart, thanks so much for your time.
Thank you.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.